How to reduce the tax you pay on dividends. Tax on dividends are inevitable. When you take money out of the company, you would need to do this even in a form of a salary or dividends. If it's dividends, then you will pay a different rate to tax if it's salary. So the dividend rates that you will pay for tax is 8.75% for basic rate taxpayers. This increases as you run through the ranks for your personal income levels. Now, how can you actually reduce the tax you are paying on these dividends? Well, you start off by using the 500 you get each year tax free. So make sure you're using that. If you have a wife, can you attribute shares to your wife so that she can take her £500 tax free each year? We then look at who has a basic rate available. So if you are well within your basic rate, it's likely we would like to top up your income right up to that basic rate threshold. We would then do the same for your wife. Can we get both of you up to that basic rate threshold, utilising that 8.75% on both of you? So sharing your income with your spouse is definitely an opted for route. You could also time your dividends so that it straddles 2 different tax years. So if you are going to take a large sum from your company, is it better to defer a chunk of that into the next tax year so that we can keep you both within those basic rate bands across both tax years? In addition to this, if you also own shares in other companies that are listed, can you potentially move these into a stocks and shares ISA so that you don't pay personal tax on these? And the last and probably most overlooked option is simply, can we draw less from the company to reduce the total dividends that you are taking from the company? If it's a solely owned company, then use that business account as a savings pot and leave as much as you can in there. This will directly reduce the amount of dividends on your personal tax return and will reduce the personal dividends that you are paying.